Hello, everybody. Happy Saturday. Thank you for joining us. This is going to be a really fun one. So yes, there is dull action in Bitcoin. And Tyler tweeted out the adage, the famous Wall Street adage, hopefully I get this one correct, which is never short a dull market. So we're going to talk about why he said that. Our thoughts on the other cryptos. We're going to have a little fun, hence why Tyler and you'll see what he's wearing. And I am outside because I have one more week of freedom before I am stuck for 3 months immobile. So you will see me hopefully in all different locations while I have a little bit of my last hurrah. I am checking your live chat, and this is going to be a lot of fun. I will say this is because we love all the different things you guys have been sending us. So we'd like to have a little bit of a fun philosophical also debate based on the questions you've been sending our way, because you guys are just providing some fun for us. Oh, Thor may try to eat some rabbits in the background. That'll be funny. He never is successful. With that said, Ty, show us your shirt.
Right. This is the new Hyperwave shirt.
Am I the generic blonde?
Yeah, absolutely. And I've got my Forbes hat on today, just to remind everybody that my partner writes for Forbes Online some very interesting articles, and everybody should look that up. And it's some really great stuff, besides the work she's doing on Medium that some of you know about, but more of you should read that. Just some terrific stuff.
Thanks, Ty. Wait, I'm cutting you off 1 second. People are asking, where's your popsicle?
That'll
really have another?
That'll come later, yeah.
Okay.
Yeah, we're going to talk about just two subjects, and then we'll get to Bitcoin at the end. I drew the conclusion that Bitcoin had become a dull, D-U-L-L market in the short term, and you already know that because I have been neutral for weeks now, many days anyway, on our short-term target. And neutral means that I don't see a 5% move up or down. And I keep saying that over and over again. And so far that's proven to be correct. And yeah, I'm glad that that was a correct observation. But now it's taking on a different meaning in my mind. When Wall Street says don't short a dull market, what it basically means is a market has started to go sideways, not only in terms of price, but also in two other things. One is volume, and the other thing is sentiment. In other words, people have become bored and they're looking at other things. They stop talking about, thinking about, and analyzing a particular market or asset class. And those three things, the fact that price stops moving up or down, volume gets smaller and smaller, and sentiment begins to dissipate, those three things together equal what is called a dull market. So what does the adage mean? You don't want to short a dull market. Now, remember, there's a difference between selling a position and shorting a position. And this isn't a technical thing, but everybody needs to understand the implications of that. If you are short a market, that means you don't actually own or haven't owned that particular market or stock or Bitcoin. But you want to place a bet against it. And you place a bet against a market or index or stock or crypto by finding someone that will lend you the shares or the tokens, which you don't own already, so that you can sell them, and you end up what is called short the market, and you pay interest on that borrowed asset. But practically speaking, what it means is you are selling the asset that you don't own first. Hopefully it goes down, and then you buy it back at a lower price, which means that you've made money between your buy price and your sell price. So that's the technical thing about shorting. Selling a market basically means you own it. You bought it.
Ty, we lost you. Yeah. All right. Well, unfortunately, you guys just get me for the time being. Thor, show your little cameo. No, he's having fun in the sun. Oh, here we go. Yeah, big guy. Yeah, big guy. So, there's like rabbits and groundhogs and fox that come here. It's actually in Washington, D.C. You guys may not know, but there's a massive park that runs through Washington, D.C. This is my house. And so he gets very excited, especially when he sees deer. I jump in the pool exactly because I can go in the pool for the next week. And then, yes, surgery is Friday. So then I am completely stuck for 3 months, unfortunately. I would have gone to Indonesia a month afterwards to surf, and that would have been fun for streaming. But now things are off. Mr. Ty?
Hi.
Yeah, we got you back.
Okay, if any of our listeners can figure out why that happens, let me just give you a little background. It started when I was doing shows with Tone, and all of a sudden my microphone would go out, and I would have to get back out of the show and back into it, and everything was fine. And I don't touch anything. I'm not touching the computer. I'm not touching my Snowball, which is a microphone that is hardwired into my computer. I don't touch anything. I'm simply talking, and all of a sudden the sound goes off. I suspect it is not coming from me, but it is coming from whoever started the program, either Tone using Zoom or with Leah when she does a hangout, which is what we're doing right now. But Leah doesn't touch anything either. You've seen her. She's sitting back and listening, but it simply goes out, and then I have to come back in. So if anybody is technically minded and understand what I just said, please contact us and tell us what the heck we're doing wrong, because it's very irritating.
Yeah, okay. We're getting some good feedback. So guys, yes, you guys are much more tech savvy probably than Ty and I. So keep sending through if you send it to drivers.
We'll try to figure out, because I know it's frustrating and irritating for you too, but I'll go on for 10 or 15 minutes sometimes, and then all of a sudden realize nobody's listening to me. Okay. So what we're talking about is shorting, which is different than selling a position. If you own Bitcoin and you sell it on an exchange, you then have exchanged it for either fiat currency or another crypto. What this adage means is it's talking about shorting the market, not selling a position you have. That's a corollary to the adage, and I'll talk about that in just a minute. But why would it be an adage on Wall Street that in a flat or dull market you don't want to be short? That to me just intuitively seems illogical and counterintuitive, but it actually works over time. And I've noticed it, for 40 years in various markets, that if you're out of a market looking to get into it and it's very slow and dull and you end up jumping in it, you very often find that the price goes against you by dropping down. If you're not in it and you're wondering, should I get in it, and it's very dull, it seems like it should be a 50-50 kind of a proposition. Is it going to go up or is it going to go down? But this adage is suggesting that it is not a 50-50 proposition, that a flat or dull market will tend to go up, not down. So I did some research this morning before I posted that tweet on what others have said over the years about it. And there's some interesting things that you can Google. Just put that adage in, never short a dull market, and read through some of the comments that are made and some of the studies that have been done. And you'll find that it's not as controversial as it sounds. The reason I tweeted it this morning is, as you all know, I believe the price of Bitcoin is going to go down, not up from here. But that doesn't mean that the adage does not apply where we are right now in a flat market. Because if we're going sideways to flat, and that adage is suggesting don't be short this, because it could break out and might break out and should break out to the upside, that would indicate that maybe I need to rethink not being long at this point in terms of my short-term target. But I've already said I'm neutral because I don't see any evidence of a 5% move up or down, but certainly not up. I will later take a look at a chart of Bitcoin and explain what I mean by that. But I just wanted to sort of lay out that philosophical thinking, and you can do your own research on it. But I have found it to be very useful through all types of markets. And we'll see what happens in this particular case. I'm not switching from neutral to positive because of the adage, but it's got me thinking that it wouldn't be surprising to see this thing break out a little bit to the upside, maybe even a 5% sort of a move. Okay, so that's topic number one. Topic number two, I want Leah to get involved in also because she's very passionate about this subject. One of our followers this morning asked me the question, or made the observation, that we claim on our home page or our profile for Twitter that I consider myself to be a Bitcoin and crypto analyst. And the observation was made, well, we've heard you do a lot of analysis on Bitcoin, but we haven't seen you in any of your vlogs analyzing the cryptos. And so they were wondering about that. And so I started wondering about it because it's absolutely true. I remember promising months ago that Leah and I would start analyzing crypto prices the way we do Bitcoin prices, and I have not gotten around to it. So I had to ask myself, why haven't I done it? And the answer is the philosophical one that we want to just spend a couple of minutes on here, which is my answer to this tweet was that I am not yet convinced that any crypto other than Bitcoin is legitimate. That does not mean that I've concluded that all the others are illegitimate. I do believe that the great majority of them are illegitimate, and the SEC is getting closer and closer to establishing that. And they have not told us what the consequences of that will be, but I don't think it will be good for most, if not all, of the other cryptos. So that was my answer, that I don't want to go public in terms of YouTube or Twitter making pronouncements about something that could very well be fraudulent, illegitimate, illegal, and overnight could disappear. Now, that sounds like a strong statement, but I don't believe it is unwarranted. So what will it take for me to begin talking about these other cryptos? Now, just a little aside here, and then I want to get Leah's views on this. But we do talk with our clients, meaning our consulting clients or the clients that we have fiduciary responsibility over their money. We do discuss, we do analyze a number of other cryptos, but that's private between two parties. And I can let that party know all of my disclaimers that I'm now making about why I don't do it publicly, but I will do it one-on-one with any one of our clients that wants my opinion about where we are technically or fundamentally on any of the other cryptos. And we do that on a regular basis. So just with that one caveat, Leah, what are your thoughts about what I've just said in terms of what you and I are doing in terms of trying to analyze this space?
It's interesting, obviously, especially given the morning brief that I'm on. A couple things come to mind. One is, as we've spoken about, there is no asset class in history that hasn't been manipulated. However, what always presents itself to me, especially following the news every day, is just how inappropriately manipulated the other cryptos are. Also as relative to Bitcoin. I mean, it's just, you know, one actor, even McAfee's, can completely pump and dump the legal actions of Bitcoin Cash with Bitmain, you know, just like absolutely everything. It's weird seeing myself on the YouTube screen. Let me cover that up. So one, and this is going to be a strong statement, I don't think it's a waste of time, but I think it's a waste of time to provide proper technical analysis advice, except for to our clients who are invested in it already. But every day to you guys on an asset class that one, sub-asset class, honestly, of the really all alts, of one that can so inappropriately be manipulated any day, any hour. And I think it's very dangerous and just inappropriate of us to try to even provide our analysis, which is buying and selling a short-term outlook, you know, midterm outlook, where you guys could potentially lose money. And, you know, our purpose, Ty, is, you know, educational on these, right? We love teaching, especially. And I get to be the host, which is the best thing ever because I just get to learn from Ty every single day, like you guys. But I am for sure here every single time. So the biggest thing that comes to me is just simply put that I don't want to provide advice on buying and selling a class, any of these cryptos, which any day just irrationally, beyond Shiller's irrationality. I wish Shiller and, yeah, well, he's already spoken actually, but Mandelbrot and the other, you know, behavioral economists and behavioral financial analysts can just weigh in more. They haven't been speaking about what the hell, you know, but because also we've been following the SEC. You know, I'm in Washington, D.C. You have been working in money management for 40 years. We have been saying that they are securities, but also that most likely the agencies are going to rain hell. So also from a moral perspective, I don't want to touch them. I've never bought any myself. Never, you know, like when I was a super noob, and also during the pageant backstage, I was playing around, you know, for, you know, just a day to try it out on Coinbase. But that is it. And that was back in October when I knew nothing. But, you know, there's just, I just don't think that I don't think it's good. Also, just, you know, like you learn about all these forks, and everybody for sure are making so much money on these other cryptos. You follow Silicon, you follow anyone, but it's not. It's so what? You can make money on Bitcoin. You can make money in traditional markets with GBTC with our analysis. You know, why go so volatile? You're already in the most volatile asset class that's ever existed. So that comes to me. Second, what comes to me, Ty, is that, you know, I had my stint of working Asian equities, although I came from fundamental analysis, but 40 years of money management, and very much understanding the complexities of how to trade, buy, and sell GBTC. And so just simply put, with your fiduciary responsibility and having clients invested with our portfolios in traditional markets, I also don't see why, you know, we would spend so much time talking about alts when we can also just spend time for everybody who's on this show who can go to Fidelity, your Fidelity account. Also, we talk about 401ks. And you know, work with the advice that we're providing here for GBTC, and hopefully more coming out, you know, down the pipeline, which are going to be even better than GBTC. So that's my second point. And so that's, you know, just, I think, much better. And third, you know, I think they're shit coins. I'm upset by the space right now, just to be very honest. And I think that it leads to more confusion. I don't particularly care to follow them. To be very honest, this is selfish. But you know, you have only so many hours in the day. Also, this is, you know, and we talk about all the forks. We talk about, you know, every single day in the morning brief. Tyler and I follow them every single day. And there are just so many alts. There are so many. And I will end on, it's super nerdy. Tyler knows I love this. I am obsessed with Sherlock Holmes and Sir Arthur Conan Doyle, and I've read every single one. I will end on, if you've ever read the first one, which is A Letter in Scarlet, when Watson and Sherlock first meet each other, when they become roommates, Watson goes and talks to Sherlock, and he's, you know, studying fruit flies and just being absolutely insane because he's insane. And Watson is just trying to chit chat and talking about the Copernican theory. And Sherlock Holmes has no idea that the Earth revolves around the sun and not the other way around. And Watson's like, what rock are you living under, man? Right? And Sherlock's like, no, I view memory like an attic, and that I pick and choose exactly what I put there because there's only so much space that you can fill your attic with, and it's irrelevant to my work, right? Even though fruit flies and crazy stuff is. So if you only have so many hours in a day, we all do. I think our most precious resource in life is our time. Then, you know, pick what you care about, pick what you love, right? And Tyler and I love Bitcoin. We love the whole space. We're fascinated by the whole space, but with only so many hours in the day, also Tyler with a grandchild and me with this little Thor child, but also a life and also just fun stuff. But just like, you know, I'd rather be an expert in understanding all the minutia of Bitcoin and providing proper analysis in my own head, but also to you guys and educating on all things Bitcoin and also the news of the space. But rather than following the price action of the other cryptos right now, beyond just the news of, you know, these pump and dumps and everything else, to be very honest, I'd rather hopefully one day become an expert in the space. And I think that requires a dedicated focus, kind of in a Malcolm Gladwell way of, you know, 10,000 hours. So that was a long speech. Sorry, Ty, but that was, I guess, the three
that
points.
Was fascinating. Thank you. And that's what, you know, we all need to do all of the time, is to step back and get some perspective on these things that we're doing and spending a lot of time. One of the things I like about the relationships we're developing with our consulting clients is the one-on-one specific thinking that you hear my side of the equation every day when we do these vlogs. So you're getting to know the way I think and what my experience has taught me about various markets. And some of that stuff can be helpful to you. And you're getting to know Leah, but we don't get to know you. We get to know you as a group, and there's a bunch of people in the Twitter sphere that you don't really know. I don't know who they are, but after reading their comments and their statements and their questions and their observations, I kind of get to know them. But when we work directly with someone, then what I try to do is I try to get to know them, their foibles, their predilections, their opinions, their biases, their experience, so that when we have discussions like the one that we're doing right now, it builds a framework around which we can really begin to communicate about this one thing that is so important to everybody: wealth, finance, how you make decisions, why you make decisions. We don't have that luxury in this particular medium because it's a one-way thing. We talk and you listen. And hopefully some of the things we're saying, if we repeat it enough and give you context from where those ideas and thoughts are coming from, they ring true to a certain extent so that you come back and listen another time. And we really appreciate those of you that do that. So just summarizing, part of my answer was, we don't yet know if the other cryptos are legal or illegal. We may never know that, but I suspect that we're about to. But it probably will not be a broad brush or as broad as it should. I would not be surprised to see the regulators carve out a piece of the crypto market. They've already carved out Bitcoin. They've made it very clear Bitcoin is different than every other token, every other altcoin, period. And they're not even going to consider it. That's important. They said it. You need to understand that. Now, the next thing is, what about that do you need to understand? Well, either they are going to say that all of the attorneys, the marketers, the VCs that brought people in to an illegal offering are going to be reprimanded, possibly punished, possibly civilly, possibly criminally. As well they should. Or they are simply going to say that we've let this go on for too long. They're not going to use these words, but this will be the intent. We, the regulators, have let this go on too long, and it has grown too big. And some of these are too big to fail, the same as a bank can be too big to fail. And we don't want to be responsible for the repercussions. So we are going to say that the top 10 or the top 20 in terms of capitalization are grandfathered. In terms of penalties, but we still want them to acknowledge that they are securities and go through all the proper channels, but we will not go after them and enforce it. The other 2,000, we are coming to get you. That is the more probable outcome that I see. So at that point, what would happen is you would have Bitcoin and maybe 10 or 15 or 20 other coins or tokens that are legal. All the rest will be illegal. Now you have to imagine what will happen to prices on the morning of that release, whichever it is. It's either they are all legal. Imagine what's going to happen to the ecosystem. Most of them are illegal, but there's a small subset that are legal. Imagine what's going to happen to the prices of them. Or there's only one that is legal, and that's Bitcoin. All the rest are illegal and will suffer the consequences. Imagine what's going to happen to the prices. Now, I can imagine, but I do not have an answer in any one of those three cases what's going to happen to the prices. My inclination, and it's only an opinion, but I think it is based on experience, is that the entire market in any one of those three cases is going to drop, including Bitcoin, which might very well be what Hyperwave has been saying all along, without knowing why Hyperwave was saying it. You never do know why a technical formation occurs. But then if either one or two of those three options I just gave the regulators occurs after that washout, then I think Bitcoin quickly becomes king again and enormous amounts of money begin to flow into it, which would be the beginning of a hyperwave. Hopefully it'd be the beginning or the continuation of a funky hyperwave at the $4,000 level. But it could very well be from $1,000 or below. What would happen in the second option, which was the regulators carve out a small piece for 10, 15, 20, 25 altcoins, is they would still all go down because there would be such confusion. But then Bitcoin would reestablish itself, and possibly some of the others that have been set aside. Ethereum possibly, Monero possibly, Litecoin possibly, that sort of thing. In the third example, I think literally you will have 2,000 altcoins that are destroyed and will never come back. So that's the legal question. I answered the follower who tweeted that, to me, this was the reason I'm doing what I'm doing by not analyzing publicly the other cryptos is not a legal thing for me. It's an ethical or moral one. And that's what Leah was talking about. That, yes, I could analyze the stocks that the Wolf of Wall Street was pushing on people, technically or fundamentally. I could do that. And I could come up with a chart of one of those that looked pretty good from a technical point of view. But I would never do that because it was fraudulent. And I am not going to hurt anyone by giving any credence either fundamentally or technically to why something might look good or you could make money doing it. If on a moment's notice, that person could end up losing everything they've put into it. So until we get clarification, that will be our position here. Other than, as I say, if we've established a specific relationship with someone, then we can talk in as much detail on any of these topics as we want to. Okay. Much more than you wanted to hear, but I hope it was interesting for you to see how Leah and I think about these type of things, and maybe how you should be thinking about them also. What I'm going to do now is we're going to talk Bitcoin, and I will bring up a chart here if I can get this working. Here we go. Wow. Okay. What you're looking at is a 30-minute chart of Bitcoin prices. We're trading at 76.20 right now. What you notice is this is neutral. This is dull. This is flat. The bottom of this chart is 7,542. The top of this chart is 7,734. And all points in between are just going sideways. So when talking about you don't want to be short a dull market, this is a dull market. We're only talking about Bitcoin, and we're only talking about very short term. This is a 30-minute chart. If we go to the 1 hour chart, so we're doubling the time period, you can see that from 73.60 over here on the left, we got up as high as 77.50. So that's about 400 points from bottom to top that goes all the way back to June the 5th. If we take a big jump and go out to the 6 hour chart, now you see some movement, but clearly there has been no movement since May the 22nd, except for sideways. We did have this big drop because we were coming down from 10,000, and then we came all the way down to 7,026. But basically speaking, from May the 22nd through today, we're in this dull, flat market. Most of that time, we have been neutral in terms of our short term, although there is a 5% move in there from the bottom to the top, from 7,026 to 7,700. But other than that, I wanted to illustrate this adage, but also talk about why this 5% up and down is important to me, because it tends to focus your thinking not in terms of will this be 100,000 someday, or is it going to be 1,000 or 1,300 or 4,000 someday, but just where are we right now and what is this market telling us? That's what my short-term analysis is attempting to do, is to answer that question. And remember, that means that tomorrow, what my short term has to be changed for the new evidence that has come in over the previous 24 hours. So if you see me changing from neutral to positive, or from neutral to negative, or from positive to neutral, or from negative to neutral, any of those combinations, it's not that I'm changing my mind. At the time that I issued those original calls, that to me was the weight of the evidence. But every second that goes by after that initial call, new evidence comes in. And this is one of those periods that day after day after day after day, the right call has been neutral. As soon as I see something, and maybe this adage will give me some evidence if we start to see this breaking out to the upside. If we go back above 7,750 or 7,800, I will probably go from neutral to positive, only because it would appear to me that this sideways dull market is beginning to punish the shorts by going the opposite way. I don't believe that's going to happen. I still think this pattern is going to drop to the downside, but I don't have enough evidence of that to go from neutral to negative to make the next 5% call. So I just wanted to tie that together with the chart so that the theoretical or philosophical can be tied in with the actual analytical, looking at something of substance. Here is our chart again of Fibonacci. Somebody asked me, where am I measuring the bottom of this chart, the zero line? And the answer is at 1,000 approximately. For a date on that, I would say January 1st is as good as any. January 1st of 2017. There's other points you could pick, but that basically is 900, and the high on that date was 1,100. It opened at 997. It closed at 909. So I just started my count on Fibonacci on that date. Pick any one of those along that line around the $1,000 mark if you're going to draw retracement up to the 19,666, and you'll get a very similar looking chart. Now, what we're looking at here is simply the hyperwave of an asset class, Bitcoin, and a specific asset, Bitcoin, in the crypto space. And where you see on what you're looking at on the far right of the chart is the last 2.5 weeks, almost 3 weeks, below the 61.8% Fibonacci. Just Google, for those of you that know something about technical analysis and understand a little bit about Fibonacci lines and retracements and extensions and forks and other things like that. It is good to see the historical background of where this came from, hundreds and hundreds and hundreds of years ago. And it's based on something that is over 2,000 years old, which is the golden mean. And this thing occurs in nature, this Fibonacci relationship. And once again, I have said that one of the most important books that I have ever looked at is called Beautiful Pictures, Pictures, Beautiful Pictures, that was put together by Robert Prechter of Elliott Wave fame. He and A.J. Frost wrote the book on Elliott Wave. And he did a pictorial of the super cycle wave in the Dow and the S&P 500 that lasted close to 100 years. And the entire book is simply charts of the relationships of all the movements in the stock market going over a 100-year period using this Fibonacci relationship and explaining why 61.8 is so important. So I don't want to get into all of that. For those of you who really want to understand the essence of this part of technical analysis, you can find that book, I think, on probably Amazon, but you can definitely go to Elliott Wave Theorist website and buy it directly from Prechter's group. It's worth every penny. And for you mathematicians, engineers, programmers, it will blow your mind and convince you once and for all, not only about the principles behind Elliott Wave, but more importantly, the basic principles behind technical analysis. Okay, enough of all that. What this chart is telling me is that we have dropped, first of all, through the 23.6, and you need to understand what these numbers mean. They are all various ratio relationships of Fibonacci numbers. 23.6 is the first one, 38.2 is the second one, 50% is the midline, that's the third one, 618 is the fourth one, and most important in my and other people's minds, and 78.6 before you go all the way back down to the beginning. The reason I started this retracement at 1,000 is because that happens to be my number for the phase one trend line for this entire structure. So what I'm doing is I'm superimposing Fibonacci on terms of hyperwave. It helps me visualize what some of these important points are, such as here at the original 78.6, which is the inverse of the 23.6 when you're doing an extension. But notice after we broke out from phase one, we stopped right on the line. We pulled back, and then we needed to break through it. And as soon as we did, right here, we stayed above that line and then journeyed up to the next line and found resistance 3 weeks in a row at that next line, which was the 61.8, until we could break through that. And then we blew through the 50% line without hesitation, which doesn't mean that it's not important, but that was the signal that we were moving into an accelerated phase four, and it didn't even care about Fibonacci, it meaning hyperwave. It just kept on going higher and higher and higher through the 38.2, through the 23, all the way up to the peak at 100%, which is 19,666. So that to me well describes the hyperwave. I would love for analysts at universities, in finance departments, for others that are watching this to attempt to correlate what I'm now saying about Fibonacci and hyperwave. I haven't had the time to do that, but I'm beginning to suspect that there's a close relationship in the natural world, in the mathematical world, and in the world of investing having to do with human behavior, all tied together. And I believe that it will be found that hyperwave is a way of linking all three of those worlds together. At some point, I would love to spend a couple of years doing nothing but trying to understand that. But if any of you have the inclination, I would encourage you to think about it. Okay, coming down from the top, we did pause at the first retracement, 23.6. Notice that we had 1, 2, 3, 4, 5, 6 weeks, all of which went above or below that line. Then when we dropped down, we dropped to the next line at 38.2. And first of all, we bounced off of it. The next week, we bounced off of it. The third week, we bounced off of it and went back above the upper line. The fourth week, we bounced off of it and went back above the upper line. And then we broke down through it, signaling the next movement, because what we've just seen is a 5 and a 6 on the hyperwave described between those two lines. And now we're ready for the full-blown phase 7 sell-off. And that occurs when we break down through 38.2 and go all the way down to the midpoint at 50. And look what happens. We bounce off the first week. We also, not shown on this chart, go down and touch the phase 3 line. And then we bounce off of it for another week, the 50%, close above it. Third week, we're above it, then we're below it and go all the way down to the 61.8 and bounce off of it. But the damage is done. We are now clearly below the 50, and this is a very important candle because it reversed the downside momentum in 7, gave us some idea that the phase 3 might hold. And then for the next 5 weeks, we trade between the 61.8 Fibonacci and the 50. Here, here, back to the 50%, 4 weeks in a row, a full month, above and below the 50%. It can't get any higher, drops back down to the 61.8. And now we are trapped below the 50. We tried to get back up to it on this move up and failed. And now we've come back down below the 61.8, and we've spent 2 weeks fully below it. That's why I am bearish, because this tells me that the phase 4 line, which happens to be almost identical with this next Fibonacci 78.6, which is coming at 4,934, is the next logical step in this phase 7 down, which could be interrupted by holding my phase 2 line and becoming a funky hyperwave. All right. What I've just given you is the full text analytics of hyperwave relative to Fibonacci. That might be meaningless to a lot of you, but the more you look into our vlogs and listen to us on these short-term retrospectives that we're doing on a daily basis about the previous 24 hours, I'd like you to start thinking in these larger terms and understanding what sort of perspective we're trying to bring to this particular party. So thank you. We went much longer than we had intended, but for one, I was very interested in those questions that were posed by our listeners that Leah and I had an opportunity to riff on. And it also got me thinking about this relationship between hyperwave and why I'm so committed to it. And Fibonacci, I wish I was the one that came up with Fibonacci 2,000 years ago, or in the case of the actual individual who was not named Fibonacci, by the way, which you will read about, which occurred in medieval times. That's got to be one of the proudest intellectual moments for the human race, in my opinion, because it is so arcane in so many ways. Almost no one has given the proper due of this whole concept of the golden mean and what it means not only for architectural studies, but also the development of the human body that Da Vinci realized, but also mathematics. And now we're seeing it applied to human behavior in the form of this type of analytics. So thank you for listening to all of that. And I'm going to turn it back over to Leah and see if there might not be some interesting questions.
Thanks, everybody. There was, I know that you guys asked me, crap, I can't go up to it. All right, buddy, the one about SAR, I can ask you right now if you can resend it really quickly. Let me try to find it really quick, Ty.
No problem. Take your time. I've got all day. And it's a beautiful day.
Okay, got it. Okay, I think. Well, at least I found the second one. Oh, we have two. Okay. I'll ask both of them because I know that you're good with multitasking all these questions. So SAR points have been criticized as a bad strategy for sideways markets, resulting in constant whipsaws. Do you trade sideways markets? And if so, what system do you use, since Consensio only works in trending markets? That's the two questions.
Great observations. Nobody should ever trade dull markets, trendless markets, sideways markets, quiet markets, and no technical tool will allow you to do that by definition. If you're trading, what you're doing is guessing what the future is going to be without any evidence. You don't know if it's going to go up or down. Consensio won't tell you that because all the lines will be going sideways. SAR, absolutely, you cannot use in a sideways market because it'll just keep flipping back and forth, back and forth, back and forth. Now, this is an important point I am about to make. It depends on your definition of time. I showed you the hyperwave in Bitcoin, which is really only two trends going almost 10 years back, depending on how you break down, the early mini hyperwaves. But if you just assume that the first 8.5, 9 years of hyperwave was a slow movement from 0 up to 1,000, that was one trend. But then it accelerated, that trend accelerated and continued all the way up to 20,000. That is one trend for Bitcoin from day one until December the 16th of 2017. We've only had one other trend, which is down from December until today. And if I'm correct, until next month and the following month and the following month and the following month, at which time it will either be at 5,000 something or it'll be going down to 1,000. But anyway, the trend is still intact. But that doesn't mean we can't have a short-term sideways movement. If you use SAR or moving averages or any momentum indicator, RSI, at the weekly or monthly period, you will find trends, and you will find that all of those technical tools are very helpful. If you drop down to the daily, they will become less helpful unless you redo your technical analysis for daily charts. And the same thing for 12-hour charts, 4-hour charts, 30-minute charts. Using SARs on a 30-minute chart is very different than SARs on a 4-hour chart or a 12 or a 24-hour chart. Just experiment it with it and you'll see that the shorter your time frame, if you use shorter and shorter technical tools, they become relevant again. But at a certain point, it becomes silly unless you are literally a day trader, meaning you're never going to hold a position more than during the trading hours of a particular day. And then you can use all the technical tools just like you do, but it is not about that asset class anymore. It's simply about the vibrations between the pulses of whatever it is that you're looking at. I hope that's clear. I hope I made myself clear there, but you're absolutely right that if the time period you're looking at has gone sideways, try going out to a larger time period to get an idea of what is happening with this shorter sideways movement that you're seeing. And that's why I said that even though the short term on Bitcoin is dull or sideways, by going to a larger time period, you can see that Bitcoin is in a downtrend. Therefore, I don't really care that the short term is saying, don't be out of this market or short this market because it could pop up. I don't care because it's not going to affect my intermediate or long term. Okay.
Yeah. Well, that's perfect. All right. I think that if it's okay, guys, we're going to sign off. And I'm going to jump in the pool. Tyler, I think you are going to as well. You have a pool. And you're going to surf the Hyperwave.
Exactly.
So, all right, everybody, happy Saturday. Have a wonderful weekend. And we'll probably get back to you guys maybe at close, but tomorrow. So take care.
Great. Thanks, everybody.